So in this video, I am going to talk about the best dividend stocks in Canada that you could invest in this probable coming recession situation with the high inflation, high interest rates and uncertain geopolitical issues. I firmly believe that in this situation, our focus should be more on avoiding the potential downside and stable income source by investing in fundamentally strong companies with stable business. I would like to quote Warren Buffett's two investing rules here. Rule number one, never lose money, and rule number two, never forget the rule number one. So in this video, I am going to talk about the 4 best dividend stocks and bonus tips while you are investing in the dividend stocks. So the first company I want to talk about is the TELUS, and the ticker symbol for that is T.TO. So it's a top-notch telecom company in the Canada, and it's currently trading at 27.4 Canadian dollars and providing 4.9% dividend, and it is very likely that it will increase in the future as well. Annual dividend growth expectations are 7 to 10% for the TELUS. It also offers DRIP, meaning you can reinvest your dividend and acquire common shares of the company, which is good if you are paying the commission for every trade. But if you are using the Wealthsimple, that you don't have to pay any commission when you are buying and selling the stocks. So if you are still not on the Wealthsimple, I am providing you my referral link in the description below, which you can use and earn surprising rewards. So let's talk about some stats about the TELUS. So if we see that the forward P for TELUS is around 19 and the book value is about 2.5, which is in line with the industry average. So the big plus for the TELUS is that it is well positioned to be benefited from the adoption of high-speed fiber internet. I believe the key factor in the growth of this company could be from the TELUS healthcare and the TELUS agriculture sector. In a nutshell, good dividend yield, stable company with the growth opportunities, and not very likely to be affected by the recession. So the second stock I want to talk about is the Bank of Nova Scotia, and the ticker symbol for that is BNS.TO. You might know that the Bank of Nova Scotia is one of the largest 6 banks in Canada. To simply describe what I feel about this stock is that you will not lose money holding it for the 3 to 5 years. In this uncertain economic situation, to avoid potential downturn and to generate passive income from the 6.2% dividend yield, this stock is definitely worth considering. So the stock is currently trading at 65.7 Canadian dollars, which is about 30% down from its 52-week high of $95 back in February 2022. The forward P for the stock is around 7.7 and the price to book value is 1.2, which is very low compared to its competitors. Meaning currently it's been trading at discounted price, and I personally like to buy stocks when there is a sale. Its dividend payout ratio is 47%, which is very well covered. One risk about this company is the Europe's economy. In short, favorable risk reward ratio with the discounted stock price and potential growth with the stable passive income, it is very attractive stock. So the third company I want to talk about is Manulife Financial Corporation, and the ticker symbol for that is MFC.TO. So it's a Canadian multinational insurance company and financial services provider. So it's currently trading at 21.68 Canadian dollars, which is down about 22% from its 52-week high of $28 back in February 2022. So the dividend yield for the Manulife is 6% and its dividend payout ratio is 33%, which is very well covered. So we can say that the dividend is high and reliable, and also dividend is growing at the rate of 11% annually. Forward P of the stock is 6.7, which is very low compared to industry average, and the price to book value is 0.86, which is again very low, meaning the stock is currently trading at discounted price. So it's worth considering this stock at discounted price and the good dividend yield of 6%. And also during the high interest rate environments, insurance companies get benefited, so as Manulife. On the downside, high growth is not expected with this company. However, you can definitely avoid potential downside with Manulife. So the fourth company I want to talk about is Enbridge, and the ticker symbol for it is ENB.TO. It's a multinational pipeline company headquartered in Calgary, Canada. It owns and operates pipeline services throughout Canada and United States, transporting crude oil and natural gas. Enbridge's pipeline system is the longest in North America, and it is very likely, if you are from Canada, that you are getting gas from Enbridge at your home. Currently, the stock of the Enbridge is trading at 51.22 Canadian dollars with 6.7% dividend yield. There are two thoughts about the dividend payout ratio of Enbridge. It is currently 140%, meaning they are earning $100 and distributing $140 as a dividend to the shareholders. In that case, it's not sustainable. However, company's payout ratio considering the distributed cash flow is between 60 to 70%, which is well covered. In fact, in a position of increasing the dividend in the future as well. You can find number of articles and blogs with all the details. If we see, for the past 27 years, Enbridge has increased its dividend every single year. To me, it seems the dividend is good and also reliable. On the downside, Enbridge is being benefited with the higher oil prices due to Russia-Ukraine war. So it's a good investment for stable passive income, at least until the oil prices are high. So if you are planning to invest in the dividend stocks, you must consider these points. Point number 1, never ignore the poor financial health of the company over high dividend yield. You will find lots of stocks with ultra high dividend yield which is not well covered by their earnings. And it also indicates that they are not reinvesting their profits back in the business for the higher growth. However, definitely there are some exceptions such as REITs, which means Real Estate Investment Trust. The second point you should consider is that the dividend payout from the company is sustainable or not. And that you can check from the dividend payout ratio of the company. So the dividend payout ratio is the ratio of total amount of dividend paid out to the shareholders to the net income of the company. And you should also compare this payout ratio with the industry average to know that the payout ratio is good or bad. Thank you for watching the video. If you find my content helpful, then please do like, share and subscribe the channel. And this video is just for an educational purposes, and please do not consider it as any recommendation.